Vince Lanci now joins me on the line from New York. Vince, thanks for being back with us.
Thanks for having me. I apologize. I have been on the road for a while.
Well, we're happy to have you back, Vince. And now that you are back with us, I'd like to get your thoughts on various topics. Let's start with the ECB. We didn't see any big surprises here yesterday. So my question to you is, what do you think keeps Mario Draghi up at night?
Well, had you asked me that question before the news yesterday, I would say the fear that he would have to ease. Certainly the markets were overweighted short the euro, anticipating that. And as you saw yesterday when he made his no need to ease comment, the markets, the euro gapped higher and was strong most of the day. But I'd have to say right now, there's nothing keeping him awake. He's sleeping quite comfortably, probably on the pile of euros that he would have to throw into the market if there was a problem. So right now he's comfortable.
Vince, are you in any way surprised in the direction that Draghi and the U.S. Fed are heading in?
As an investor, I shouldn't be. Just as a human being looking at Main Street and how Main Street really is not benefiting from this recovery, I'm surprised. But I'm an idiot if I'm surprised, because this is just the way it is. They just want to make the markets look good and create a wealth effect for those people that they can and export inflation. So I guess I shouldn't be surprised.
All right, next topic I'd like to discuss with you, Vince, is China and how much gold they actually own. This topic is once again hot. Many people expect China to release new numbers in terms of their gold reserve holdings. There's some opinions on the internet suggesting that China actually holds 2.5 times more than the gold that they currently say they have. What are your thoughts here?
First of all, historically, China lies, and they do that like anyone else who's in the market. They're not going to disclose what they're doing until they're done doing it. So historically, you have to look at it as saying whatever they're saying, they're underreporting. But when you look at analysts that are looking at the PBOC numbers, yeah, maybe those numbers are accurate, but maybe that's not who's buying for China. China certainly is in the market in other ways, and there are other banks that could be holding for them, that they just haven't repatriated the gold yet. But my view is the market is starting to anticipate habitually that China lies or China underreports. And so now you're talking about numbers and whisper numbers. And if we don't get a big increase to what is expected, then maybe the gold market would take a hit as a result of that. It's almost discounting the insincerity of the Chinese purchasing. But China will continue to be a buyer and a repatriator of gold that they own overseas for a simple reason, and that is, they believe that, the price of gold is suppressed, and they know, as I think anyone who plays the gold game knows, that suppressing the price of gold is beneficial for the U.S. In maintaining the U.S. dollar's role as an international reserve currency. So if everyone in the world were to either buy gold or get the gold out of the West and repatriate their gold, that would undermine the dollar as a reserve currency. So China is setting a lot of pieces up to let their currency, their renminbi or RMB, whatever you want to call it, become a more solid currency for global growth.
So Vince, let me ask you, let's say it does come out that China actually holds 2.5 times more gold than they currently have. Would this even impact the price of gold, or are you saying that this has already been taken into consideration?
Well, I'm saying you'd have to put. I don't have my finger on. You'd have to look at the CFTC shorts and longs if it's overweighted one way or the other to see what the perception of the market is. But if the market could be discounting that China is underreporting as usual. Meanwhile, the market may not be discounting it as usual. You have to actually look at the commitment of traders numbers, which I haven't looked at, to lean one way or the other. But the fact of the matter is, it's no longer a number. It's a number and a whisper number. But to answer your question, in short, yeah, China could come out buying 1.5 times more than they said they did, and that could have no effect on the market.
And Vince, you say it so confidently. From what I understand, you're convinced China is lying.
Yeah, sure. Lying is a bad word, right? Managing the expectations of the market, I think, is what government officials say. They say things like, that number could change depending on revision. China does not want to tell you what they're buying.
All right, Vince. The next topic is a news item that really came and went quickly in the media, and that involves Deutsche Bank exiting the LBMA gold fixing. There's 5 banks that are involved in the twice daily fixing. They no longer want to participate. What did you make of this news item?
Well, before we get to the bigger story, it makes sense for Deutsche Bank to pull out of the gold fixing if they're not in commodities anymore, simply because they don't have the customer base, or they're selling their customer business, or they don't have a warehouse. But when you look at it like that, it's fine. But before that, a couple of days before that, the German regulator, I'm not sure I can say the person's name right, Elke Koenig, asserted that gold manipulation is, quote, worse than the LIBOR rigging scandal. And so, they may be saying, the premise may be that they're getting out of gold fixing to get at, because they're getting out of commodities. But to have it come right after an announcement by the highest regulator in Germany, accusing the precious metals markets of being very manipulated, I don't think that's a big coincidence. I think there's a reason for that, and I don't know that anyone would want to get out of the gold fixing. That's an important seat to have, to be on the LBMA and the gold fixing. Why would you just leave that?
Well, that's interesting because many said that Deutsche Bank exiting from this was no big deal and that the fixing is not even really relevant today.
The fixing is relevant. It's not as relevant as it was in global markets, but if you're a European bank, and I may not be 100% right on this, but if you're short gold and you're a European bank, you need to mark it on your books at a certain price. And the fixing is, I'm not saying that they actually fix the price, manipulate the price at the fixing, but the fixing is an event that allows you to carry gold on your books for the rest of the day. So, it's about balance sheet manipulation more than anything else. I mean, if they're short a lot of gold and they have an interest in the price going down for the fixing, when they mark their books to market for the night, then the fixing is important. Even if it's not important for manipulation, it is important because it is a window into the primary and growing liquidity of gold in London. What seems a contradiction for Deutsche Bank to be getting out of the gold fix process, the London fixing process, is that when you look at the increased demand from China, when you look at the fact that the demand in general for gold is moving east from the U.S. and the center of the world is now in London again, at least for precious metals demand, why would they be getting out of the fixing process, which gives them a window of liquidity to enter orders for their customers, unless they don't have a warehouse in the Far East? I mean, I don't know. Do they?
Yes, they actually opened a gold vault in Singapore back in June.
So there you go. I mean, that's the point. Why would you do that and then exit this? It sounds like you're putting one wing of the plane on and taking another wing off. You have a warehouse to store gold, and you just cut off one of your pipelines to acquire gold to store it there. It doesn't make sense, and makes me lean a little bit more towards, hey, we're worried about regulatory issues.
Finally, Vince, I know you've been traveling and you've been looking at a lot of mines. Is there anything that you can tell us in regards to the price of gold these days?
I'm starting to see something. It's very early, and I would not say it's going to be factored into the price of gold for a while. And, maybe I'm a little paranoid, but I'm seeing the cost basis for gold go down. And first of all, I think it's lower than what it's currently stated at. People will say 1,100, 1,200. Right. What I'm seeing is the cure for high prices, cliche-wise, is high prices. And you're seeing old mines being reopened for tailings, for slurry gold, and the cost basis is under $1,100 easily. And like natural gas before it, technology may decrease the cost of production, and you could see a cost basis as low as 800.
But would that directly impact the price of gold, Vince?
You're going to see it in stock prices first. You'll see big mines that don't have the technology, they will go down in price because they can't compete economically, and the smaller mines with technology will go up in price. But yeah, it would affect the price of gold. But I'm not talking tomorrow. I'm talking 2, 3, 4 years from now.
All right, Vince, on that note, thanks for calling us. Thanks for being with us.
Oh, we'll do a visual next time. I appreciate it.
And thanks for watching this edition of On the Spot with Vince Lanci. He'll be back with his show, Reset, In the meantime, you can email us at newsfeedback@kitco.com or follow me on Twitter at Daniela Camboni. Thanks for watching.